Okay, champs, welcome back to Libertas Trading and welcome to the event preview for the Canadian jobs data coming out on the 5th of December 2025. So, used to get really excited about Canadian jobs prints, especially on non-NFP week, which it is this week. Well, it is NFP week, but obviously we're not getting it. So, I'm going to define this as non-NFP week. But yeah, usually be really excited for this. Has caused in the past, the start of the year, we had some amazing trades out of Canadian jobs. But the last few months, it's been disappointing, especially that October number, which came in amazing. So we'll talk about that in a second. So I'm not overly excited about this one, and I will be keeping my risk about 50% lower. I'm also only looking for particular numbers, which we'll also talk about. But just in terms of the Bank of Canada, so we've now cut 275 basis points over the last 18 months. We're now basically in wait and see mode just to see how the economy evolves, to see how the labour market evolves. Inflation as well. So we've got no cuts priced in for the next 12 months, and we've only got 2 basis points of cuts priced in for the next meeting, which is on the 10th, I believe, next week. So yeah, really not expecting any major medium term moves from today. Rates markets probably won't move too much. We may get a few more cuts priced in for next year, or a few more basis points of cuts priced in for next year. But in terms of getting any full cuts priced, we'd really need to see a few months of deteriorating labour market data, just to confirm that trend as opposed to the off print. So again, not looking for anything major here, but it could be worth a scalp on the right numbers. But as I said, due to past reactions, which we'll talk about, I am only looking for particular numbers, and I will be keeping my risk a bit lower on this one. So just heading over to the trade scenario sheet. We spoke about this last month, and I'm sure most people know the crack by now, but we are really looking at this full-time jobs number. This is the most important number. Of course, the unemployment rate is important. Of course, this employment change is important, but the full-time jobs is really where the money's at. So basically, the employment change is made up from full-time jobs and part-time jobs combined. But yeah, we're really focused on this full-time jobs number, which we'll talk about from last month's print in a second. So for a dovish reaction, I'll be looking at minus 50k or lower on the employment change, which is 25k below the minimum and should be enough for a scalp. And then for a hawkish reaction, I'd be looking at 50k or higher, which is 20k above the max and should be enough for a scalp. If I talk about enough for a scalp, if I was looking for a medium term trade, I really would be looking for some larger numbers in this. I'd be looking for probably like 70, 80k on the dovish and the hawkish, with most of that being from the full-time jobs. So with the full-time jobs on the dovish reaction, I'd be looking at the majority of the minus 50k to come from full-time jobs. If it's less than 50, minus 50k, even better. And then on the hawkish reaction, we want the majority of the 50k employment change to be from full-time jobs. Of course, if it's more than 50, then that's amazing. The unemployment rate, I would trade a 6.9 and a 7.1 if these numbers are good enough. But for now, for a dovish reaction, I've got 7.2% or higher, which would be the highest since July 2021 and would wipe out last month's print. I think if we print at 7.1, I'll show you now quickly. So 7.1 would be a bad number, but that would just put us at August and September levels. These are both 7.1 here. So wouldn't expect any major moves from a 7.1 number. So I would be looking for a 7.2. It is quite a jump higher, but we have seen that in October to November, for example, or from January to Feb. We got a 0.2% one there. So yeah, they're the numbers I'll be looking for really, unless we get some massive numbers from that full-time print. And then for a hawkish reaction, I'd be looking at 6.8% or lower, which would be below the minimum and back to the lowest level since March. Average earnings, 3.8% or lower, and then 4.2% or higher. This isn't a majorly important print, but of course, we do still watch it and we do still hope that all of these come in the same. So I would be including this in my analysis. Expected reaction, of course, we'd want CAD lower on a dovish reaction and CAD higher on a hawkish reaction. So for medium-term plays, I won't be trading anything longer than a few minutes due to past reactions, but if we get some really shocking numbers, it could be worth a hold. So we'll quickly go and check out the last 3 months of data to see how we've traded, what sort of numbers have caused what sort of reactions, and it will just give us a bit more information on the combination of numbers we're looking for and what reaction that could lead to. So this was November's number. And this does show the importance of the full-time employment rate. So we had average hourly earnings come in nice and hot. The employment change came in at 67k, which was massive and well above the max consensus, well above the consensus. We were like 69k above consensus. The unemployment rate came in at 6.9, which was below the minimum, which was amazing. Part-time came in 85k, and then participation rate came in higher as well. But if we just look at this part-time number, so all of this data is brilliant, amazing stuff. But with this full-time employment being minus 18k, that basically means that, you know, we lost 18,000 jobs from 18,000 full-time jobs in Canada. You know, for a strong economy, we need to be building full-time jobs, not part-time jobs. So even though these numbers were amazing, that print really just soured the data. And you can see from the reaction here, you know, how badly we traded on the back of these numbers. So if we quickly check out the 5-second chart just to look at the shorter term reactions, again, massive spike lower, probably on that employment change and unemployment rate number. And then just you know, not a complete reversal, but a pretty solid reversal. And, you know, this is the reason why we're really particular on that full-time employment number and the unemployment rate, just to make sure they both come in line together. So yeah, this one was a bit of a nothing burger, although it did get a few people excited. And this print for me was pretty worrying in terms of trading Canadian data. So again, non-NFP week, which is normally decent. We had the employment change coming in again, massive at 60k, which was, you know, well above consensus, well above the max as well. 35k above the max is, you know, pretty special numbers. That unemployment rate coming in lower at 7.1. Okay, it wasn't close to the minimum. You know, we're still 0.1% away from the minimum and 0.2% away from beating that, but, you know, still nice numbers. And then that full-time employment at 106k. You know, we created 106,000 jobs in the month of September in Canada, which is massive numbers. This is a bit of a dream print, to be fair. And look at the reaction. You know, we peaked after 3 or 4 minutes. So really disappointing stuff. And it's actually this print that's putting me off, you know, risking a bit of money today. So again, I will be keeping my position size a bit smaller than usual, cutting it in half. Quickly looking at the 5-second chart on this one. You know, we can see price drop pretty fast. As we'll talk about when we go through the scalping plays, it does usually pay to wait 5 or 10 seconds or 10 to 15 seconds with Canadian data. You know, you can usually get a little bit of a reversal. And just remember, just because price comes down to here on TradingView, you know, you're probably getting filled down at 39.80 somewhere, which means we're reversing 12 pips. So you're just shooting yourself in the foot getting into early with Canadian data most of the time. So it's usually best to wait, but we will talk about that in a second. Yeah, again, you know, not the best reaction. You know, you maybe would have scalped some money out of this, but to be fair, yeah, it was a difficult one to trade. And then just head into September with the August data. We had that employment change coming in really low. Employment rate coming in higher as well, which is obviously bad if you got a higher unemployment rate. But then that full-time, you know, the full-time employment change didn't make up the majority of the employment change. So, you know, this one wasn't tradable either. So again, it just shows the importance of waiting for the perfect print. And we saw a bit of random price action here in the first sort of 5 seconds. We'll quickly check a look at that chart now. So again, this is EuroCAD because it was NFP week on this one. So yeah, random price action in the first 5 seconds. Again, it would have been good waiting for a 5 or 10 second entry point because you're probably getting filled around here somewhere. And yeah, you know, you may have made some money on this one, but in my opinion, a bit too risky to trade with that full-time employment number not coming in exactly how we wanted it. So just heading over to the medium-term play. So on a dovish reaction, you could look at some Aussie CAD longs if we get a bad enough print, as we mentioned. So Aussie is the strongest on the sessions at the time of writing and has been pretty bid for the last 2 weeks. It's been trading really well. Current risk on sentiment should support the pair as well. We actually have hikes priced in next year for the Aussie now, which is crazy to think about, which is opposed to a small amount of basis points of cuts priced in for the Bank of Canada, which will, of course, increase on a weak number this afternoon. So we do have some slight policy divergence there. Technically, we've broken above a fairly decent area of resistance, so it feels like we have some momentum on our side as well. So we'll quickly check out the Aussie CAD chart. So here's the Aussie CAD on the daily. You know, we had this sort of area of, this bit of an area of resistance up here where we had a few touches. But yeah, it's really, you know, it wasn't the most amazing resistance level, but we still had a few touches of this sort of 92-cent level, and we have broken above that. So wouldn't be surprised to see some further upside, you know, maybe targeting 93 or even up to sort of 93.79 up at that high from October 2024. Of course, we're not going to get that purely from this jobs print, but if we do get some more positive news for the pair next week, we could see price climb up to there. And, you know, entering on the back of this could just be a nice catalyst for some price action. And then head into a hawkish reaction. You could look at some Euro CAD downside if we get a good enough print. So it feels to me like the euro is starting to get a little bit tired at the moment, especially against the dollar, which correlates very strongly with Euro CAD. We're in a pretty tight range on the pair, but if we break below channel support and the 100-day daily moving average, further downside wouldn't be too much of a surprise. So again, checking out the Euro CAD chart and the Euro dollar chart. So for the Euro dollar, you know, it looks like we're getting a little bit exhausted around these levels. We've got the 100 daily moving average there. You know, which could show some good support. So I wouldn't be surprised to see this move lower and the dollar get a bit stronger going into the FOMC next week. We've had a lot of downside in the dollar. And then just checking out the Euro CAD chart. So this is the Euro US dollar chart. The Euro CAD chart, again, there's not a lot going on. We do have a bit of a major channel going on here, and that does correlate with the 100 daily moving average again. But if we can break below both those levels, we could see some solid downside in the pair. And we have found some resistance up at that sort of 163.30 level. So that could be a nice pair to short. But again, just be cautious of how price reacts around this level. So for scalping plays, which will be my preferred play today, I'll be choosing my pair depending on how Euro US dollar is trading at the time. So based on past results, I'll be in and out pretty fast. Prices tend to peak after about 3 or 4 minutes. So if I haven't hit my target levels by then, I'll either close the trade or reduce my position size and hopefully bank some profits. Of course, the more shock in the data, the longer the move should last. In the past, it's almost always paid to wait 10 to 15 seconds before entering. That's, of course, when the spreads calm down a little bit as well. So I do have smaller targets when it's not NFP week, as we seem to get nicer entries and there's a lot less vol in the markets. So for Euro CAD, I'll be looking for an 18 pip target. And then for dollar CAD, I'll be looking at a 15 pip target. Any questions, feel free to DM me through Substack. And good luck, guys. Hope you make some money.